Welcome to Wealthion. I'm Wealthion founder Adam Taggart, here with a brief video digging into important comments two of the world's very richest businessmen just made. Elon Musk and Warren Buffett have both held the top honor of world's richest person. Musk currently retains the title at around $220 billion in net worth. Buffett hasn't held it since 2008, though he's still doing pretty okay. He's currently fifth on the list at around $120 billion. These two moguls have extremely different personalities and approaches to building wealth. Buffett's the avuncular oracle with a slow and steady hand on the tiller. Musk's the brilliant and reckless maverick. Those differences have sometimes spilled into the headlines, with the media eager to sense a feud between these two titans. Famously, Buffett has referred to Bitcoin as rat poison squared, while Musk has often endorsed it, as well as other cryptocurrencies. But based on recent comments both have made, they both agree on the following. Inflation is becoming a real threat. 3 days ago, Elon made a direct appeal to his army of Twitter followers, asking for their predictions of where the inflation rate is headed over the coming years. Why did he do this? Well, he soon made that clear by tweeting out that two of his companies, Tesla and SpaceX, quote, are seeing significant recent inflation pressures in raw materials and logistics. And Musk wasn't just blowing off steam, he followed his words up with action. This morning, Tesla announced that it's raising the prices of all of its car models in the US by 5 to 10%. It's being forced to pass along at least part of its input cost increases to its customers. Now, let me just take a moment to provide a little context as to just how bad inflation is getting right now, and then I'll share Warren Buffett's take on the situation. Due to a multitude of factors, including but not limited to a structural lack of investment in the commodity sector, trillions of dollars worth of monetary and fiscal stimulus issued in response to the COVID lockdowns, inventory shortages and bottlenecks created by the disruptions in global supply chains, and now international embargoes against raw materials from Russia following its invasion of Ukraine. Inflation has soared from a mild 1.4% a year ago to a 40-year high of 7.5% today. Prices of nearly every key commodity our economy depends on have exploded higher, from oil to gas to wheat to nickel to fertilizer, you name it. Home prices and rents have risen by around 20% over the past year, as have medical costs and other essential services. The resulting higher prices and scarcity of supply have consumers feeling very nervous about the future, with inflation expectations at their highest since 1981. And not only will the higher cost of living depress consumer purchasing going forward, corporate spending and investment will see a decrease as well. These higher input costs are near certain to bring down corporate profits. While the brunt of the impact won't be seen until companies start reporting results for 2022, earning reports for Q4 of 2021 saw 73% of companies citing inflation as a threat. That's the highest percentage since at least 2010. This drag effect on spending and prosperity is why Warren Buffett has colorfully accused inflation as being a, quote, tapeworm in the past. Here's a well-known quote from his annual letter to shareholders back in 1982, when the last U.S. inflation shockwave was starting to abate. For inflation acts as a gigantic corporate tapeworm. That tapeworm preemptively consumes its requisite daily diet of investment dollars regardless of the health of the host organism. Whatever level of reported profits, even if nil, more dollars for receivables, inventory, and fixed assets are continuously required by the business in order to merely match the unit volume of the previous year. The less prosperous the enterprise, the greater the proportion of available sustenance claimed by the tapeworm. And like Musk, Buffett has been vocal recently about the pernicious effects he's seeing as inflation has returned. In May last year, he rang a warning bell that the business units at his Berkshire Hathaway empire were, quote, seeing substantial inflation, and that, quote, we are raising prices. People are raising prices to us, and it's being accepted. Note that this was almost a full year ago. Inflation has gone much higher since then. So what to do about it? Well, Buffett's already deploying his response. He intentionally built his confederation of businesses to persevere in an inflationary environment. These are the two criteria he has long publicly said are most important to look for in companies when investing during periods of rising inflation. He looks for, quote, an ability to increase prices easily and an ability to take on more business without having to spend too much. In his latest investor letter in this May, he assured his shareholders that Berkshire's core insurance businesses are very well positioned to do this, saying, the insurance business is made to order for Berkshire. The product will never be obsolete and the sales volumes will generally increase along with both economic growth and inflation. Also, integrity and capital will forever be important. Our company can and will behave well. And the results are proving him right so far. Investors have flocked into Berkshire Hathaway as inflation has spiked over the past year. Class A shares are up from $272,000 a year ago to nearly $500,000 now. That's almost a doubling. And Musk, for his part, is raising prices, as I mentioned earlier, but he's also advising his followers to move their investment capital into, quote, physical things. On Monday, he said this: as a general principle, for those looking for advice from this thread, it is generally better to own physical things like a home or stock in companies you think make good products than dollars when inflation is high. For those looking to follow this advice, I have two free resources that should prove helpful. The first is for those who don't yet own precious metals like gold and silver, or who don't think they own enough yet. Buying gold and silver is one of the quickest and easiest ways to protect the purchasing power of your wealth from inflation. And I am getting a ton of emails, comments, and tweets these days from people looking for guidance on reputable places where they can buy and store precious metals. If you have those same questions, go read my free guide on how to buy and store gold and silver over at wealthion.com/howtobuy. And for those looking for ways to invest that take advantage of today's inflation and supply shortages, few sectors offer more opportunity than what's going on right now in uranium. Rick Rule, one of the all-time great natural resource investors, is holding an online conference this coming weekend, Saturday, March 19th, which is an all-day boot camp dedicated to revealing the many compelling investment options in this space right now. If you're at all interested in that, go to wealthion.com/virtual uranium to learn more and how to register. This vexing inflation isn't going to go away anytime soon, folks. It's going to be with us for quite some time. On the day I'm releasing this video, the Federal Reserve is expected to announce its first interest rate hike in years to start getting serious about combating inflation. Of course, the expected small 0.25% rate hike will be woefully insufficient to tame inflation currently raging at 7.5%. So as I said, expect a long, protracted battle with the inflation monster in the year ahead. If you like short topical explainer videos like this, folks, please support this channel by hitting the like button below and then clicking on the red subscribe button, as well as the little bell icon right next to it. And don't forget to go read my free report on buying gold, as well as to check out Rick Rule's upcoming uranium conference. I'll put the links to both of those in the description of this video below. Good luck protecting the purchasing power of your wealth, folks. We're all going to need it. Thanks for watching.